Welcome once again to our accounting classroom, and we are looking at the topic of subsidiary books and ledgers, where we are looking at 6 subsidiary books. We are looking at the general journal, the cash book, the sales journal, the purchases journal, the sales return journal, and the purchases return journal. And we're looking at these 6 books for the recording of our transactions with respect to a business. We would have looked at recording transactions for a sole trader, and we have now introduced in previous videos the accounts of limited companies. So this question that example question that we are going to be looking at in this series of videos is a company, and as stated, the journalizing of the transactions for a company is no different from journalizing the transactions for a sole trader. There is just a slight difference when it comes to capital, and we would have mentioned in our introduction to limited companies, we talked about the fact that a company capital is broken up into small units, which are called shares. And we would have also spoken about the fact that there are 2 classes of shares, where you have ordinary shares and we have preference shares. We also mentioned that you had authorized share capital and issued share capital, and there's a difference between authorized and issued. We've also mentioned that our shares will usually have a par value, or what is known as a nominal value, and that is the value that is written into the constitution that the company would like to sell their shares at. However, we also stated that the company can sell their shares for more than the par value, and when they sell them for more than the par value, they are usually selling them at a premium. So we're going to look at this example question, which is for a company, which includes things like shares and also dividends. We also mentioned that with a sole trader, the owner puts in all of the capital themselves, and when the business makes a profit, the owner shares takes all that profit for him or herself. But when the business suffers loss, then the owner has to bear that loss, him or herself. And we stated that with respect to a company, when a company makes a profit, because that they sell shares, they have persons known as shareholders, and they want to share that profit with the shareholders. That profit is distributed to the shareholders as something known as a dividend. And in our introductory video on limited companies, we would have went through several questions with respect to shares, calculating shares, the value of shares, and also calculating dividends for ordinary shareholders and for preference shareholders. So all of that will be coming out in this example question. Now the question states, LSL Plc was formed on July 1st, 2012 by issuing ordinary shares at a par value of 75 cents. So this is the value that is written into their constitution, and they are issuing shares. So the shares 75 cents each. The following balances were extracted from the records at July 1st, 2013. It states they had a bank overdraft. Remember that a bank overdraft is when the business would have withdrawn too much money from the bank, and because they have withdrawn more money from the bank than they have, it is now like a little loan that they're getting from the bank, and then this becomes a liability. So bank overdraft is a liability. They have premises, which is an asset. They have accounts payable, which is also known as your creditors, who are Junior Jordan, this is a liability. Sheena Grimes, a liability. I know cash will always be an asset. They have equipment, which is an asset. accounts receivable, which is known as your debtors, Carol Smith, an asset, and Catherine Hope, who's an asset as well. And here they have ordinary share capital, but you do not know the value of ordinary share capital. So as with respect to a sole trader, when we use the accounting equation which states assets equals liabilities plus capital, and we use that accounting equation to work out what the capital was for the sole trader, you are going to use the same accounting equation to work out what the ordinary share capital is for this company by stating capital is equals to your assets minus liabilities. So we have some transactions here, and we're going to go through these transactions, and we're going to look to see which book of original entry we would journalize these transactions in, which is the first stage in our accounting cycle. So on July 1st, Catherine Hope paid half the amount outstanding by check. So she's paying by check, and she's getting a 5% cash discount. You're reminded that a cash discount is recorded in the cash book. She is paying by check, so therefore this is a cash transaction. So this transaction will be recorded in the cash book. On the 2nd, sold goods on credit to Carol Smith for $650 and Jennifer Johnson $945. So we're selling goods to customers on credit, and we state when goods are sold to customers on credit, that is recorded in the sales journal. So we are going to record this transaction in the sales journal. On the 4th, paid for those balances on Junior Jordan and Sheena Grimes accounts, less a 6% discount in each case by check. So LSL Plc is paying paying their creditors, who are Junior Jordan and Sheena Grimes. These are the creditors. They are paying them. So therefore, this payment to the creditors is a cash related transaction, and it will be recorded in the cash book as well. On the 7th of July, bought goods on credit from Sheena Grimes for $750 and Junior Jordan $375 and Tremaine Ward $561. So now LSL Plc is buying goods on credit from suppliers, and we state when goods are bought on credit from the suppliers, then that is recorded. That is a credit transaction, and it is recorded in the purchases journal. On the 10th, return damaged goods to Sheena Grimes. So now LSL Plc is returning goods to a supplier, and we state that when goods are returned to the supplier, they are recorded in the purchases returns journal. On the 12th, sold goods to H. Morris $875 and D. Doe $1,290, both paid immediately by check. So this is the important statement here. It said both paid immediately by check. So since both of them paid immediately by check, this becomes a cash transaction, and there's no need to record it in the sales journal because we don't need to know who we sold these items to. We just need to know that we were paid immediately for the items. So it's a cash related transaction and should be recorded in the cash book. On the 15th, Carol Smith settled her account, paying by check, less a 3% cash discount after returning goods value at $150. So we have a return here. So Carol Smith, who is a debtor. So Carol Smith is a debtor, and she is returning goods, and she's also settling her account. So if she is returning goods to LSL Plc, that is what you will call a return inwards or a sales return. So this will be recorded in the sales return journal. And since that she's paying her account by check, this payment with respect to the cash discount will be recorded in the cash book because it's a cash related transaction. Then on the 17th, we are now getting to the issuance of shares. On the 17th, it said issue 4,000 ordinary shares at a price of $1 per share. And it says all funds were sent by check. So since all funds were sent by check, then this will be recorded in the cash book because you're recording the money that the business would have received from issuing these ordinary shares. Then on the 20th, paid wages in cash, $600. Cash related transaction in the cash book. On the 25th, receive rent by check from a tenant. So this is also cash related transaction, so recorded in the cash book. On the 27th, purchase a new piece of equipment valued at $3,395 from JAD Inc. A down payment of $2,500 was made by check. So we are stating that since that this is a new piece of equipment that is being purchased and it is being recorded, since this is a new piece of equipment that is being purchased on credit, we are going to record this in the general journal. And since a down payment was made to JAD Inc. by check, we are going to record this payment to JAD Inc. In the cash book. Okay. On the 28th, pay $450 of the cash into the bank. This is a contra item, so we are going to record this in the cash book by debiting bank and crediting cash. So it's going in the cash book. And then finally, on the 31st, pay dividends of $800 by check to the shareholders. So since we are paying out a dividend, this is a cash related transaction, so it's in the cash book. So we are required to journalize all the transactions in the appropriate books of prime entry. And we are also going to be required to prepare the various ledgers, which is our sales ledger, purchases ledger, and general ledger. And we will also be required to prepare a trial balance as well. So this is part one of a series of videos looking at journalizing transactions for a company in the subsidiary books and ledgers. So we're looking at books of prime entry and we're looking at our ledgers as well. And we will continue this question in our next video. So please like and subscribe to this channel.